A man stands at a grocery store holding a basket with milk, bread, and frozen food. He calculated twice before picking up. He taps his card. Declined. He tries again. Still declined. Now there's a line behind him pretending not to stare while he mentally scrolls through every transaction from the last 2 days, trying to figure out what went wrong. This is how financial pressure usually looks. Not dramatic, not cinematic, just quiet embarrassment inside ordinary places. And what most people never realize is that the banking system reacts to you differently depending on how much money you have. The difference between someone with negative balances and someone with millions is not just wealth itself. It's how quickly problems get solved, how flexible the rules become, how human the system suddenly feels. Because banking is not one experience. It's multiple hidden levels operating inside the same institution. And the higher you climb, the more the system starts working for you instead of against you. Level 1, negative balance. This is where money stops feeling digital and starts feeling physical. You feel it before opening the banking app. A missed payment, a delayed paycheck, a subscription you forgot about renewing overnight. Now the account is negative, maybe minus $18, maybe minus $280. But the exact number barely matters because the system reacts almost the same way regardless. A fee appears within hours. Then another transaction clears while the balance is still below zero. Now you owe money on top of the money you already didn't have. This is one of the harshest realities about modern finance. Being poor is expensive. The card declines at a gas station. The transfer arrives late. The app sends another warning notification. And every small mistake multiplies because there's no financial cushion underneath you absorbing impact. You call customer support hoping someone can remove the fee. The person on the phone sounds polite but distant. They explain policy, mention limitations, offer scripted sympathy. Because at this level, the institution is not designed around understanding your situation. It is designed around managing risk automatically. The system does not know why your account is negative. It does not know your hours were cut. It does not know rent increased. It does not know inflation quietly destroyed your margin for error. The system sees one thing: instability, and instability gets processed accordingly. This is what financial stress actually feels like. Not luxury problems, not internet motivation speeches, just trying to calculate whether you can survive until Friday without another fee hitting your account. #2, barely stable. Eventually the balance becomes positive again, but stability still feels temporary. You have a few $100s in checking, maybe a little savings, enough to survive normal weeks, not enough to survive bad ones. Now the banking experience changes slightly, not warmer, just less aggressive. The overdraft fees happen less often, but new costs quietly replace them. Maintenance fees, minimum balance requirements, transfer limitations. You begin noticing something strange. The bank charges you for not having enough money sitting untouched inside the account. And if you already had enough money, most of those charges would disappear automatically. The savings account earns almost nothing. Numbers so small, they barely feel real. Meanwhile, the same institution lends money out at rates high enough to generate billions. This is the level where many people first understand how banks truly make money. Your deposits are valuable. You just don't have enough of them yet for the institution to compete for your business. You apply for a credit card, not a premium card, not travel rewards, a beginner card, maybe secured. You deposit your own money first so the bank feels comfortable lending against it. It sounds backwards because it is backwards. But this is how financial trust gets built at the bottom of the system. Slowly, cautiously. At this level, customer service exists, but relationships don't. You are not important enough to receive flexibility and not dangerous enough to deserve attention. You are simply another account moving through an automated structure. Level 3, stable income. Then something changes. Not dramatically, not overnight, just consistency. A paycheck begins arriving regularly. Every 2 weeks, every month. The amount is predictable, and suddenly the system notices. Not emotionally, algorithmically. Your account behavior changes. Balances stabilize. Bills clear successfully. Direct deposits arrive on time. The patterns connected to your financial life begin looking safer. And almost immediately, opportunities start appearing. Credit card offers, pre-qualified loans, higher limits. The same institution that ignored you 6 months ago now wants to expand a relationship. This is one of the most important truths about banking. Banks trust patterns more than people. Consistency matters more than personality. You apply for a small loan, maybe for debt consolidation, maybe for a car repair. And for the first time, the answer is yes. The interest rate still isn't amazing, but approval changes something psychologically because the system finally feels usable instead of hostile. Monthly account fees disappear because your direct deposit qualifies you for waivers. Support becomes slightly faster. The institution starts treating you less like a financial risk and more like a customer capable of generating long-term revenue. And that changes the experience completely. Level 4, growing savings. This level usually arrives quietly. No dramatic moment. No overnight success. Just years of ordinary discipline repeated consistently. Savings begin stacking slowly. An emergency fund forms. Investments start growing in the background. Debt shrinks. Financial pressure softens. And the system responds immediately. Credit scores improve. Loan offers become cheaper. Card limits increase automatically. This confuses many people at first. The bank suddenly trusts you with more money precisely because you no longer look desperate for it. That's how financial risk works. The safer you appear, the easier borrowing becomes. And easier borrowing creates even more financial stability. The car loan that once carried painful interest now comes with significantly better terms. That difference matters more than most people realize, because wealth is not built only through earning more money. It's also built through losing less of it. Lower interest, lower fees, better financial products. The system slowly stops draining you. And for the first time, you begin experiencing leverage. Not power exactly, but momentum. The bank starts trying to retain you instead of simply servicing you. Upgrade offers appear. Premium products get recommended. Customer support becomes noticeably smoother. You're no longer invisible inside the system. You are becoming valuable. Level 5, preferred client. At this level, the experience begins changing in ways that are difficult to explain to someone who has never experienced it. Small problems disappear faster. Support calls get answered quicker. Fees get reversed more easily. Complicated issues suddenly become manageable. You may even get assigned a dedicated banker, a real person, someone who recognizes your name, understands your accounts, and occasionally reaches out before you even ask for help. This feels personal, and in some ways, it is. But it is also business, because banks understand lifetime value extremely well. A customer with growing assets today could become significantly more profitable over the next decade. And institutions compete aggressively for profitable long-term relationships. This is where premium financial products begin appearing naturally. Better rewards cards, investment accounts, mortgage pre-approvals, exclusive offers hidden from ordinary customers. The institution is no longer just holding your money. It is positioning itself to manage your future. And something changes psychologically too. Financial emergencies stop feeling catastrophic. Unexpected expenses become inconvenient instead of destructive. That emotional difference matters more than people think. Because when survival pressure disappears, decision-making improves. You think longer term, negotiate differently, take calculated risks more confidently. Money doesn't just create comfort. It creates breathing room, and breathing room changes behavior. Hashtag 6, high net worth. Somewhere between comfortable and wealthy, the relationship changes completely. Banking stops feeling transactional. Now the institution wants visibility into your entire financial life. Investments, taxes, estate structures, retirement planning. This is where wealth management enters the picture. Advisors begin discussing timelines instead of paychecks, risk allocation instead of survival, preservation instead of recovery. The conversations sound completely different from level 2 because the priorities are completely different. At lower levels, banking is about access to money. At higher levels, it becomes about protecting and multiplying it efficiently, and the service quality improves dramatically. Wire transfer issues are solved immediately. Fraud alerts get handled in a single call. Large transactions move faster. Time itself becomes part of the product, because wealthy clients value efficiency almost as much as returns. And this is where many people begin noticing something uncomfortable about the financial system. The rules are technically the same, but flexibility expands significantly. Policies that once felt rigid suddenly contain exceptions. Processes that once required endless approvals become smooth and direct. The institution has not become kinder. Your relationship has simply become more valuable. And valuable relationships receive attention. Level 7. Very high net worth. Beyond a certain threshold, ordinary banking starts disappearing entirely. Now the institution offers things most customers never even hear about. Exclusive investments, custom lending structures, private opportunities unavailable to the general public. Interest rates become negotiable, not advertised, negotiated. Entire teams may begin managing different parts of your financial world. One advisor handling investments, another focused on tax strategy, another specializing in trusts or estate planning. The environment itself changes too. Meetings happen in private offices instead of crowded branches. The experience becomes quieter, more controlled, more selective. And this level reveals something important about wealth. Access compounds just like money does. The wealthy gain access to tools specifically designed to preserve and accelerate wealth growth. Not illegally, structurally. That distinction matters, because the financial system naturally prioritizes clients generating the most revenue. And eventually institutions begin competing aggressively for those relationships. At this level, you stop feeling like a customer. You start feeling like an asset the institution wants to protect. Level 8. Ultra-wealthy. At the highest levels, banking no longer resembles normal banking at all. This is private banking, not marketing, not luxury branding. Actual institucional prioritización. You no longer call general support numbers. You contact a private banker directly, someone whose entire job revolves around managing a very small number of extremely valuable relationships. They know your businesses, your long-term goals, your family structures, your investment priorities, and more importantly, they know exactly who inside the institution can make decisions quickly. This is where the experience fully separates from ordinary finance. A transaction that might take days for someone else gets completed before the afternoon ends. A complicated loan is reviewed by senior decision-makers already familiar with the relationship. Large financial movements happen quietly behind the scenes because the institution has systems specifically designed for clients operating at this scale. At lower levels, banking feels reactive. At this level, it feels anticipatory. Problems are handled before they become visible. Opportunities are presented privately. Terms are discussed personally instead of publicly advertised. And eventually one truth becomes impossible to ignore. The rules never disappeared, but flexibility increased dramatically. Fees get waived quietly. Exceptions happen smoothly. Processes accelerate automatically. Not because the institution suddenly became generous, because the relationship became too valuable to mishandle. This is where wealth stops buying products and starts buying responsiveness. Time gets protected. Friction gets removed. Access expands. And the people inside the institution understand something very clearly. Losing a relationship at this level has real financial consequences. That creates a level of attention most people never experience. The same banking system that once felt cold, automated, and indifferent at level 1 now feels personal, coordinated, and highly responsive. Not because the system changed, because your position inside it changed. So here's the truth. The banking system isn't going to change, but your place inside it can. Tell me in the comments, which level are you at right now? Be honest. No judgment. And if you want to know exactly how to move from level 2 to level 4 without more income, subscribe. My next video is for you. I'll see you there.